Hello everyone, my name is Pat Westhoff. I'm Director of FAPRI, the Food and Agricultural Policy Research Institute here at the University of Missouri. I'm going to talk today about the market outlook for corn and soybeans. As always, the market outlook depends on the weather and the size of the crop. And back in May, USDA projected a 16 billion bushel corn crop based on farmer intentions to plant 97 million acres. If that had happened, we'd have a record level of corn production. Actual acreage is coming in lower, and USDA's August estimate is 15.3 billion bushels. Pro Farmer survey suggested a smaller 14.8 billion bushel crop, and there's lots of other estimates out there, of course. Corn exports are an important part of the story as well. U.S. corn exports declined in 2018-19 and again in 2019-20 because of strong competition from Brazil and other exporters. In August, USDA projected a rebound in U.S. exports in the 2021 marketing year. China has been buying more, with imports projected to reach a 7 million metric ton tariff rate quota. But to reach the USDA projection for U.S. exports, other countries will need to import more as well. Ethanol uses have been also an important part of the story for corn. Fewer people were driving in early 2020 because of COVID-19, and that meant less gasoline use and less use of ethanol in 10% blends. Gasoline and ethanol use have increased in recent months, but remain far below normal levels. Throwing questions about the application of the renewable fuel standard, and ethanol remains an important source of corn market uncertainty looking ahead. Looking at the corn supply and use table, this table has 4 columns. The first 2 columns are going to give you USDA estimates for last marketing year and for the crop we planted this spring. The last 2 columns give FAPRI estimates for the current marketing year and for the crop we'll harvest next year. You can see the sharp increase in production in 2020 estimated by USDA. Such a sharp increase, even with increased feed and residual use, increased ethanol use, and increased exports, USDA was projecting a significant increase in ending stocks for the 2021 marketing year, and thus a lower price of just $3.10 per bushel. We adopted most of USDA's estimates on the production side, except we assumed a lower yield in Iowa because of the derecho and the drought. So 15.8 billion bushels assumed there for our level of 20 crop year production. Similar levels of feed and residual use and of ethanol use. Very slightly lower export figure than USDA, but again, not terribly different. The lower level of production translates to a bit lower level of ending stocks and a slightly higher price than USDA was projecting. For the 21-22 marketing year, we were projecting about 91.3 million acres planted. That'd be a slight dip from the 92 million acres planted in 2020. You can see the figures there for feed and residual use and the other use categories. That combination gives you a slight dip in ending stocks and a price that increases to $3.39 a bushel. Actual prices, of course, will be very different than that when all is said and done, given all the uncertainty about next year's production and use. On the soybean side of things, spring flooding sharply reduced 2019 soybean production. The drop in total supplies was much smaller because of large beginning stocks, due in part to the trade dispute with China. The sharp rebound in U.S. soybean production in 2020 could lead to record U.S. supplies, and 2021 could again see another large crop. Prices will face downward pressure unless the crop size shrinks or unless demand is very strong. Soybean exports depend on China, and depend on Brazil, and of course depend on the rest of the world as well. Total soybean imports by China dropped sharply in 2018-19, the red line there, because of African swine fever effects on pork production and because of China's retaliatory tariffs on U.S. soybean imports. The rebound in China's imports has been strong as the hog herd expands again and as the Phase 1 deal encourages U.S. exports to China. Brazil's exports of soybeans now far exceed U.S. exports, and prospects for 2021 depend in part on crops yet to be planted in South America. Spring flooding, of course, sharply reduced acreage in 2019 from what it would have been. Soybean acres fell sharply, and corn acres did not increase as much as it would have increased otherwise. USDA reports a strong rebound in soybean acreage and smaller increases in corn acreage in 2020. With normal spring weather and continued strong soybean prices versus corn, 2021 could see soybean area near the levels of 2017 and 2018, while corn acreage only is projected to decline slightly. We do show an increase in total acreage in 2021 on the assumption of more normal weather next spring, and therefore a bit less acres that's classified as prevented plant. Here's the soybean supply and demand table. You can see the sharp increase in production in 20 by USDA and by us. The crush level is up a little bit this year. Seed and residual use rebounds to more normal levels from the artificially low level of 2019-20. That figure will probably be changed when USDA comes back and revises its estimate of the 2019-20 crop in the months ahead. But you can see ending stocks are expected to remain around 600 million bushels this year by both USDA and by us. So that's consistent with the price in the low $8 range. $8.35 a bushel is USDA's estimate, $8.24 is our own estimate. That's far below where the market has been in the last couple of weeks as I speak to you in late August. If we actually get a crop as big as USDA, and we're assuming in this slide, there could be downward pressure on prices for relative to where the market was in late August, unless demand is incredibly strong. For the 21-22 marketing year, if we have an uptick in acreage but a return to more normal yields, we could be talking about another crop of about 4.4 billion bushels. With use levels relatively similar to what they're projected to be for the 2021 marketing year, we could be talking about a slight dip in ending stocks and therefore a slight increase in prices. The point, however, is not to say that this is what the price is going to be, but rather to give you some notion that it'll take a lower level of supplies or a stronger level of demand to really bring down stocks to get the kind of price recovery that people would like to see. Thank you for your attention today. For more on this baseline set of projections and all other FAPRI work, go to our website, www.fapri.missouri.edu, and feel free to contact me by email or by phone if you have any questions. Thank you very much.